Hello and welcome everyone. I am Babak Abbassadeh, CEO of Toronto Center, coming to you from a pretty cold -5 degrees Toronto, which I'm sure is probably colder than where many of you are. Um, we are delighted to co-organize this event with a global organization called CARE, C-A-R-E, on women's financial inclusion, a catalyst for sustainable development as part of the International Development Week. I don't think we could have imagined when we were organizing this session where would we end up today in the world. We're talking about a topic that perhaps is in retreat, topic that may not be so du jour today, but it's really important to the work of Toronto Center and the partners you see at this webinar because the work has not been done. Why? Because despite the advancements of the past 2 decades, still more than 1 billion women do not have access to financial services. Closing the gender gap in financial access is not just a matter of fairness value system, it is actually a critical driver of sustainable development, economic growth, and financial stability. This event reflects the shared commitment of Toronto Centre and CARE and the partners presented here in promoting inclusive and resilient financial systems that empower women worldwide. CARE is an 80-year-old organization, a global confederation working to save lives, fight poverty, and achieve social justice in the world by investing in women and girls and advancing their leadership. Toronto Centre is only 26 years old, but we've been on the scene training over 28,000 financial supervisors from 109 countries since inception to build more stable and inclusive financial systems. Our mission is generously supported by Global Affairs Canada, Swedish SIDA, the IMF, and other valued international partners. Some of them don't exist today, like USAID. Today, we're honored to have 3 distinguished panelists who bring diverse expertise and perspective to this important conversation. Our good friend, very good friend, Sophie Sertan is the CEO of the Consultative Group to Assist the Poor, CGAP, a global partnership advancing financial inclusion for the world's underserved populations. Our new friend, Mai Abulnaga, first sub-governor of the Central Bank of Egypt, a very important systemic country, and a new chair for the Alliance for Financial Inclusion's Gender Inclusive Finance Committee. And our partner, Claudine Mensah Abot, Vice President of International Programs and Operations at CARE. You have seen their bios. I'd also like to remind everyone that while this session will be conducted in English, simultaneous translation is available in French and Spanish for your convenience, so look for those buttons. We also want to make this a very interactive session. Don't be shy, ask your questions, and if you don't ask questions, I'll have to keep going on, and you have to hear my voice. So please help me make this more interesting. Sophie, let's give the very first question to you. But before I ask, I want to underscore that under your leadership, CGAP has driven evidence-based innovations in digital financial services, empowering women and marginalized groups globally. CGAP is a very efficient organization and worth every dollar of aid that they get from anyone. Sophie, as technology-driven financial services evolve, how can regulators ensure that innovations such as open finance, digital payments, and alternative credit scoring do not inadvertently reinforce existing financial exclusion, particularly for women? So it's basically systemic barriers. What policies or regulatory approaches can help maximize the benefits of financial innovation while addressing potential risks related to access, affordability, and fairness? Thank you.
Thank you, Babak. And first, thank you for your very nice words on CGAP and for having me. I'll start first, not by responding to your question, but reinforcing something you started with, which is that yesterday, in fact, we just launched the Impact Path Finder, which is a source of curated evidence on the impact of financial inclusion. And you are absolutely right when you started this conversation by saying financial inclusion in general, but of women in particular, directly contributes to economic empowerment, jobs and entrepreneurship, resilience, and so ultimately to economic growth and stability. So very important topic indeed. Now, to your question, you are absolutely right that there are fundamental disruptions technological and data-driven advances in the world that are completely, in my opinion, changing the prospects for financial inclusion and economic empowerment of women. But they also come with risk, as you said, and regulators have a very important role to play in basically maximizing the opportunities while controlling the risk. The opportunities really come from the fact that traditional obstacles to women financial inclusion can be circumvented by data and technology advances. These obstacles relate fundamentally to one, the inability from financial sector providers to see the business case for women. Small transactions, no data, um, the need to tailor products to their needs being perceived as complicated, the cost of including them with a smaller transaction due to the smaller economic participation in general in many countries. All of this has typically led gender neutral strategies to be implemented, but not targeting really the needs of women. And that has also typically been reinforced by gender norms that have made the interactions between women and the financial sector much more difficult in many countries due to their inability to travel, their inability to own assets that are used for KYC documentation or assets that are used for collateral, etc., etc. And so what the advances in technologies are doing, in a way, is changing completely these obstacles by decreasing fundamentally the cost of serving women and of providing small value services, because you basically can automatize, use AI, ML to do a lot of that work, transforming completely the types of documentation and collateral that is needed, because you can really use data. And when I say data, I don't mean credit histories, I mean new data, payment data trail, for instance, to do a lot of these services that in the past you relied on more formal documentation form. And you can also serve women much better where they are through digital delivery mechanisms, alternative financial services providers, etc. So the economics of serving women has changed, while at the same time, data allows you to really understand their needs much better and tailor products and their terms and conditions much better to their needs and to their cash flow abilities. Now, all this comes with risk. You're absolutely right. And I think the risks are manifold. The main one for me is exclusion. I think you mentioned it in your question, because all of this relies on basically connectivity and data. If women are not able to access connectivity, including cell phones, and if there is no gender disaggregated data that enables to identify women and their needs specifically, then you're going to reinforce exclusion instead of leveraging these advancements to provide them with more financial services and more access. So that's the main risk. So digital public infrastructure and making it inclusive, and data governance and making it inclusive are essential. And these are where authorities have a key role to play. But beyond that, you also have other types of risks that are growing rapidly around basically cybersecurity, data thefts and misuse, frauds, scams, etc. And we know that first-time users, it's especially women that would enter the financial sector through these advances, are more likely to suffer from these problems. And they care. They really care. Women care about their identity, their protection. And so consumer protection, reinforcing consumer protection, investing in digital and financial literacy also is extremely important, and where authorities have a key role to play. Maybe the last thing I'll say is, of course, creating the ecosystem, the financial ecosystem that can serve women well. So you need not just the DPI, the digital public infrastructure, but you need to enable financial actors that serve women to operate alongside more traditional actors. Mobile money operators, for instance, or agents that accompany formal financial institutions to serve women where they are. Enabling fintechs, which are those who are going to use those data, those alternative data to provide alternative services. All of these new actors are very important to serve women. And so looking at regulations and looking at whether regulation itself enables this inclusive ecosystem is also very important. I'll stop there. There's so much more we could say. But
That's great. No, Sophie, as you were speaking, I was just reminded, why do we keep inviting you back? Because you packed so much information in a tight time frame. We've given our speakers no more than 5 minutes to respond to these really complex questions. You covered it very well, but a couple of things I want to pick up from you just to be able to advance. One is, I'm getting the sense that gender equality is also as a human right, so that needs to carry on. The other thing is that the promise of technology is really helping right now, when in fact, technology is such a double-edged sword. We're dealing with it in so many different aspects. You talked about disaggregated data, and we had done some work with USAID on sex disaggregated data. That work is still available, even though the organization doesn't exist. I recommend people to come and take a look at it on our website, because dovetails very well with what you were saying. My next question, second question in this round, is going to go to the sub-governor. And you have been a driving force behind Egypt's policy innovation to expand financial inclusion, focusing on women and underserved communities. You've also been an expert and a champion on initiatives to support women entrepreneurs to advance inclusive economic growth. So my question to you is, how can regulators serve as catalysts in advancing gender inclusive finance? Now, maybe a bit of an oxymoron. Regulators are supposed to stop innovation in some ways, but they're now a partner in this very important point. Um, how would you approach that? Thank you.
Thank you, Babak, for the introduction. And I'm really honored to be here today to discuss this very important topic among such distinguished panelists and wonderful audience. So I agree with you. Sometimes regulators do a bit hinder the advancement of the regulators, but not in our case. But let me first start by emphasizing that central banks do have an integral role to play in advancing women financial inclusion. Over the past years, we have seen that many central banks and regulators across the AFI network have realized the importance of gender inclusive finance. And since the adoption of the Denarau Action Plan in Fiji in 2016, and I was very honored and lucky to take part in its drafting, and to date, and with the support of the AFI network, regulators and policymakers have created enabling environments for financial inclusion of women, resulting in the reduction of gender gaps in developing countries from 9% to 6% in 2021. That's a lot, because gender gaps are very tricky, and men's financial inclusion run faster. So really, that was an achievement. It's also worth mentioning that 78% of the AFI members identified gender inclusive finance as a high priority for the countries in the last 2 years and in the coming 2 years. This reflects an affirmation that addressing gender gaps in financial services is a shared and a growing priority. And here, actually, I would like to take this opportunity to applaud and give credit to my dear friend and sister, Miss Elsie Addo, Deputy Governor of the Central Bank of Ghana, who was my predecessor and the chair of the Gender Inclusive Finance Committee. Elsie has done a great job along with her committee members in launching the Gender Inclusive Finance Policy Model, which serves as a very valuable point of reference for regulators and policymakers. And I think that moving forward, the committee will work on implementation, just on implementation, and to consolidate the effort and to group people where they are, and to really try to spread out how this can be implemented well. Now, moving from the global landscape and onto the level of the Central Bank of Egypt, we have really put women's financial inclusion at the heart of our agenda. We have addressed women's financial inclusion through a multi-layered approach, which, uh, while at the same time, leading the coordination and alignment effort on the national level, which at some point in time may become tricky. So first, we started by mandating the collection and the reporting of sensitive segregated data from financial institutions. This helps lay the foundations for evidence-based policymaking. We've established a financial inclusion data hub in 2018, where we collected sex disaggregated data on the supply side using unique identifier, the national ID. And on the demand side, we've conducted a demand side survey to understand the barriers of financial inclusion and be able to build our policy interventions accordingly. We're currently working on updating the demand side survey to understand where we were and where we're heading. The outcome of those was a comprehensive data set from the supply side and demand side that enabled us to launch an evidence-based gender-sensitive financial inclusion strategy that prioritized women financial inclusion among the most important target groups. So on the level of the regulatory environment, and that's the most important part that any regulator can do, we have issued a simplified KYC where women may open a personal bank account only with a national ID. We've also noted that women that work from homes face problems in opening bank accounts and KYC issues and compliance issues when they receive the money. So we have created an economic activity account whereby women can open a commercial bank account that is for commercial purposes using the national ID. We've issued a unified definition for women-owned led business. And we've also enabled mothers to open bank account for their minors independently for the legal guardian. And this, in our part of the world, is something. On the parallel from financial literacy came hand in hand with all our efforts, where literacy activities came in three dimensions. So the vast public, financial sector employees who are actually public facing, but also who are not public facing because compliance officers sometimes do hinder reform tracks, as well as policymakers. So, for example, we would not want the tax authority to put financial inclusion as part of their tax collection efforts. This, of course, comes hand in hand with achievements done on promoting digital financial service and the fintech industry. So the implementation of our national financial inclusion strategy came through a number of strategic projects, among which is our digital village saving and lending associations, which is called Tahwisha, slang for savings in Arabic, and which was we've done with our strategic partner, the National Council for Women. And finally, so that I don't take too long, I just would like to highlight the impact of the work that was done. So our effort has led to a surge in the numbers of financially included women to reach 20.8 million women out of a total of 32 million. And those are the figures for June 24, reflecting a growth of 252% compared to 2016 and reflecting 63.4% of financially included women. I will stop at this and back to you, Baba.
That's amazing. I mean, so this is the progress you made has been really impressive. And the one word, if I can summarize all of it, is comprehensive. I mean, you sounds like you have done everything: financial inclusion, accounts for mothers, and your metrics speak for it. You shout out to Elsie. I also want to give a shout out to her. Hopefully, she's watching and getting blushing. But she's a member of Toronto Center's board of directors and also our banking advisory board. Fantastic professional. Can't say enough about her. Also, we're getting a lot of embarrassment of riches here. I'm getting hello from Benin, from different countries in the world, Tunisia, Brazil, and even Montreal. And so there's a lot of interest, and I want to save time for them to be able to ask some questions. And 408 participants all the way from, I mean, all letters of alphabet, Algeria to Zimbabwe. So not bad. Okay, let's go to Claudine. I think let me ask you to sort of anchor this round and be the final participant on this round. Claudine, you have extensive experience in implementing and scaling savings and loans groups, something I would like to hear about, and have witnessed firsthand how these initiatives drive financial inclusion and economic participation for women. So my question to you is, how have savings groups advanced women's financial inclusion, and how can digital innovation further formalize and scale their impact? Thank you.
Thank you very much, Babak, for your question. And first, I would like to thank the Toronto Center for this partnership with CARE. We are so proud to work with you, and we are thrilled at the prospect of the impact we can have on women's financial inclusion. To your question, first, I want to say that women's financial inclusion is not just about banking, it's about agency, capacity, opportunity, economic resilience, inclusion, as we heard from Sophie and Mai. At the same time, we see that women remain disproportionately excluded from financial systems, with 9% of women in developing countries lacking access to a bank account. At the same time, we see that women digital barriers further deepen this gap for women. We have more than 780 million, 80,000 women who still do not use mobile internet. And among them, 60% live in South Asia and Sub-Saharan Africa. While at the same time, we see that the smartphone gap it has narrowed slightly over the years. Women are still less likely than men to own a smartphone, 13% less than men. And it means, in terms of data, that about 200 million fewer women have access to a smartphone. But what we see is that when women manage to overcome these challenges, they still face other challenges such as affordability in terms of costs, etc., poor connection, access, and also social barriers that Sophie and Mai mentioned earlier. And all that limit their ability to use it to save, invest, and grow their income. CARE has initiated a community-led solution that we call saving groups, and we pioneered it 30 years ago. It started in West Africa. Today, we are proud to say that worldwide, by all other organizations that are implementing it, we have more than 70 million people, mostly women, that participate in saving groups. And this includes 21 million people that CARE directly supports. And these 21 million mobilize on annual basis $1 million US. Sophie said that actors in the sector do not really see business case that women represent. But 1 billion in savings annually is big. And these saving groups create a pathway for financial inclusion, particularly for women who, as we know, are often excluded from formal banking. I want to highlight here very briefly the impact of saving groups on women's financial inclusion. As we know, for most women who are part of it, savings groups are their first access to financial services. Because by saving small amount and borrowing on flexible terms, they can invest in education, healthcare, and business growth. We also see that being member of savings groups, it boosts women's income very significantly. And we see 153% increase in income in the first year for women, and it can grow up to 275% over 5 years. We also have noticed through not only observation, but also studies that we did, that savings groups, that they create financial resilience for families. And members of families that are part of savings groups are 85% more likely than non-members to save for emergencies. And we see that for every $250 US invested in setting up savings groups, 3 children go back to school. I can go on and give all these examples, talking, for example, like settings, like in crisis settings in Yemen and Syria, where CARE adapted savings group to support recovery, and where we saw that it helped increase the food security from 30 to 96% of households who participated into it. But what we see is that beyond the financial services, savings groups contribute to build, they are built on trust and social capital, and then they contribute to build women's more self-reliance, and also decision power is increased for them both in the households and in the communities. And savings groups serve as platform for broader development outcomes, as I said earlier, in education, in nutrition, and in health. What we've seen is that digital integration has offered a game-changing opportunity to bridge the gap for savings groups members from informal to formal finance. And by leveraging this mobile technology, we can expand financial access, enhance group efficiency, and also build financial identities for millions of women. And we are so thrilled to see how different stakeholders, partners have been supporting the work we do. And I want here to highlight the importance of public-private partnership that is critical, as well as the role that central banks play. We heard Mai talk about it. We have the experience in Egypt. We also have the experience in Bangladesh, where cases were led to the central bank issuing a formal directive to commercial banks. And this with less than a year. By asking them to offer low-interest loans, they have been able to open more than 3,000 bank accounts in less than a year for savings groups. We can see that this partnership also pays a lot and it paves the way. And I want to end by saying that the digital solutions, as we see them, they unlock unprecedented opportunities. But at the same time, we still have structural barriers that need to be addressed, especially when it comes to access to mobile devices and digital literacy. Because while women in low and middle income countries, as we said, are less likely than men to use mobile internet, we need to ensure that not only they have access to it, but they have the confidence in using the digital tools. And as we look ahead, we want to highlight here, and this will be my message here, that the key to formalizing and scaling the impact of savings groups, it lies in continued investment in digital solutions and also in stronger partnerships with financial institutions, with governments, and the commitment to advancing women's and girls' financial access. Thank you.
Oh, thank you so much, Claudine. I think what I'm hearing from you all along, everything that you're talking about is empowerment, right? So you're talking about the grassroots mobilization, and the virtue of your work is not just access to financial services, but also the know-how and the ripple effect it has to other aspects of the SDG, like nutrition, health, education. It's quite an interesting story and dovetails very well with the other speakers. Okay. For the second round, we're going to talk about empowering women entrepreneurs and scaling savings and loan groups. Think of this as your practice run for CNN. There they give you 30 seconds. I'm only really going to give you 4 minutes, and I'm going to watch the time because you can go on for a long time and we will all be captivated by you, but we want to give some time to the speakers. Sophie, let's come back to you. You talked about disaggregated data. So what role does gender disaggregated data, implicit biases in regulation, and women's leadership in financial sector play in fostering inclusive financial systems, and how can regulatory frameworks help in this area? Thank you.
Thank you, Babak. I think we've heard a lot, but very quickly, I think first, as Mai, I think, really exemplified, authorities, the financial sector authorities have a leadership role to play. So developing a national financial inclusion strategy that puts women and their financial inclusion at the center, using sex disaggregated data to define targets, I think is one of the key things they can do. Secondly, we talked a lot about regulation in this discussion. I think regulation is essential. It can both maximize impact and minimize risk. And their authorities have a very important role to play. It starts with KYC. I think Mai explained it very well, using proportionality simplifying approaches and documentation requirements for women is one way regulators can help. It continues with credit. Credit regulation is directly related with questions around who is the signing authorities, what are the documentation that are required, how are creditworthiness assessment conducted, what kind of security and data is needed. But even question around debt collection, enforcement really matter to women. And there's a lot of horror stories on that front. So credit regulation really matters. Even licensing, the types of provider diversity that is needed to serve women, allowing digital business models, allowing innovation, fostering innovation, for instance, through sandboxes. So licensing regulation really matters. Of course, consumer protection regulation truly, truly, truly matters. I think we heard it from everyone. Promoting financial literacy and disclosure requirements, simplifying the transparency of what is explained, but also everything that's related to determining suitability of products really matters. We want to serve women with products that are commensurate to their cash flow abilities, for instance. Everything that's related to abusive provider practices, customer redress, data protection, data privacy, all of this truly matters to protect women. Agent network regulation are fundamental because you want diversity of agents, but you also want agent onboarding regulations to really equip them with the right ability to serve and protect women and maybe teach women, provide this digital on-the-spot digital and financial education that is needed. And then finally, governance regulations also really matter because, as you said, we need to have women in leadership roles. We need to have women agents. We need to have women in credit decision roles, basically throughout financial institutions, because that's going to help. We go around those biases and those gender neutral vision that have not been neutral in reality so far. And maybe last but not least, we're asking about data. I think data governance is fundamental. And so regulations around data sharing and interoperability frameworks to democratize access to data, such as through payment reforms that enable to generate more small transaction data, but also open finance that enables those small transaction data to then be shared and used by financial providers is essential. And of course, data availability. So bridging digital divides in data availability through SDDD and demand surveys, as Mai was also explaining, is also where I think regulators have a key role to play. I think I've used 2 minutes, so I'll stop here and give you back.
Actually, that was quite impressive. Thank you. And Sophie, when I'm listening to you, I get so optimistic because we can get so down on technology and seeing how us and our kids get hooked on Instagram and whatever it is. But there's so much important things that can be done with technology, and you really rhymed them off very, very well. So Claudine, sorry to put you on the spot, but let's move over to you. Savings groups have been widely adopted by various actors, including governments. How are governments scaling these initiatives, and what opportunities, challenges, and impacts have emerged in this process? Thank you. Now you're muted. We're having a bad sound day. Sorry about that. We'll work it.
No, thank you, Mark. I was saying that I wish I could hear from Mai before responding to this because the role of of government, of central banks has been very critical and fundamental in financial inclusion for women and also in scaling up saving groups. Governments across sub-Saharan Africa are increasingly adopting saving groups to advance financial inclusion, social protections, and women empowerment. Because as we said, it's not only about backing, it's really empowerment of women in general. And a 2018 report of the SIP, Small Enterprise Evaluation Project, identified that 74 government interventions were developed and implemented across 20 countries, highlighting the role they play in financial strategies. And I want to highlight here a few examples of how governments are scaling savings groups. They are doing it through few approaches, one being policy integration. An example, we have the examples of Rwanda, Cote d'Ivoire, and Uganda, where they have embedded savings groups into national financial inclusion strategies, legitimizing a broader engagement from the sector with its savings groups. We also have the examples of programs that are funded by government or jointly funded and implemented by them. Cote d'Ivoire, for example, is aiming at funding the establishment of 25,000 savings groups by 2026. And we see that Rwanda is already implementing an initiative that has reached 700,000 members. And it's beyond these 700 members, it benefits to more than 3 million people. And in terms of government-led projects, we also have the case of Uganda, where CARE, private sector, and the government are partnering on a project that is serving and supporting 340,000 women. These are some examples that we can give on the role that the government play or can play in promoting savings groups to support financial inclusion. But there are a few opportunities and challenges that I want to highlight here, though. In terms of regulation, we see that while we have some policies that enable financial integration in some countries, others impose quite restrictive fees or registration hurdles. And it requires advocacy to support these frameworks. And that is what part of the role that CARE and other actors play along a women's group. We also have some challenges around coordination, where we see misalignment between national policies and local implementations that causes inefficiencies. And at the same time, and this is where we are seeing the opportunities, we have emerging coalitions in countries like Nigeria and Madagascar that aim to streamline this effort across the sector, both from the private sector, women's group, savings groups, and also non-governmental organizations, local and international. The last point that I want to highlight, both as a challenge and opportunity, is on funding side. What we have observed, and I'm sure you share that, is that dedicated funding remains a challenge across the board. Although you see in countries like Rwanda, inclusion of savings groups in the national budget demonstrates scalability potential. But this is the opportunity also to send out this message and call for more support in dedicating funding to support savings groups. While we see that more and more, as you said, and increasingly governments recognize savings groups, the transformative power of savings groups, it also requires sustained collaboration, smart regulation, and investment to unlock the full potential that these savings groups can offer. So I want to conclude here by saying that what is important in the work that we do and the role that government institutions can play is, one, to formalize financial access while preserving savings groups' community-driven nature, to avoid that too heavy regulations kill these initiatives. We also want to highlight here that regulatory clarity strengthens savings group sustainability and financial linkages. So it is important to have these accessible and clear regulations. And the third point I want to highlight here as a key takeaway is that strategic policies integrate savings groups into national financial systems, and they ensure that millions of women have access to financial services. And this is an opportunity to remind us again of the critical role these savings groups play. And all these frameworks that I briefly spoke about demonstrate the role that government can play in scaling savings groups and doing it in a responsible way while maintaining the grassroots impact. So we look forward to continue the collaboration with government institutions, sharing lessons and approaches that have worked to ensure that more women access to financial services. Thank you.
No, that was a very good way of integrating all of it. Also, just for those who might think savings groups are kind of an exotic thing to talk about, well, in Western Canada, in Europe, cooperatives and savings and loan groups in the last century or so, or earlier than that, played a pivotal role in development. So these are just what you're doing. You're bringing a lot more energy into this and adapting it for the specific needs and how to marry it with domestic resource mobilization. So it's very impressive. Deputy Governor, so sorry about the last time. I apologize for interrupting you. Hopefully we can hear the good stuff that you were saying. If you could rewind the tape and start, that would be great.
Can we try? Can you hear me like this? Can we try? Is this any better?
It's much better. I'm not going to interrupt you. Go ahead. Yeah.
Okay, that's wonderful. So I was just giving credit to CARE that they started in Egypt the first informal saving groups. And thanks to them, I believe they were pioneers indeed. I don't know if you heard that part, but it was a great start at the time and it showed the great potential for the saving groups, yet it was also still cash-based. So it posed a lot of security challenges and it had limited funding for project creation and hence it had slow opportunities for economic growth for the women. So we decided to digitize the VSLA's model and we developed an application, and that's where the name Tahwisha comes in. And we tried to digitize the project. So we made it available on smart mobile phones that were handed to facilitators and office and field officers that were hired by the National Council for Women from the villages themselves. And those were really our real champions on the ground because they played an integral role in disseminating financial literacy. The application is linked to a joint bank account for those groups, through which the saving session would be opened by the facilitators and by the group leaders through the use of wearable bracelets that act contactlessly, tap to open the session instead of using the physical keys. And the women just loved it. They loved the bracelets. So they saved through the use of prepaid cards, which are scanned by the facilitator through the application itself. They are also able to take out small loans worth 3 times of their savings value for micro projects. So today we have around 246,000 women onboarded, and we have about the same amount that are already financially and digitally educated and ready to be onboarded. The total deposits are about 3.2 million, regardless of the exchange rate. They are in millions, the savings, and loan percentages amount to 35% of those savings. So we have we've created about 9,300 projects were initiated. And we are really proud to say that the impressive impact of Tahwisha had attracted more and more partners, which gave us more assurance about the sustainability of the innovated model. So the European Union and the Kingdom of the Netherlands have contributed to the project. The government of Egypt has announced the project as a national project and contributed as well. And accordingly, the target number of our beneficiary rose from the original funded by the central bank 100,000 to around 2.5 million. So to conclude, technology was a game changer, especially during the COVID times where we were scared that it would not work. But it was really amazing for the extra vulnerable population who faced mobility challenges and disability, or the remote areas and whatever, all the social constraints that you would see. Digital financial literacy activity were essential and still are essential to ensure that target segments are capable of using the service. And of course, I can't but mention the importance of public-private partnership to scale up the activities and maximize benefits to the public. I'll stop it here. Thank you.
It's great. And now I feel good that I interrupted you because now we can hear it. So, and that was great. Excellent answers, Gabe. Thank you, especially in the context of Egypt. So there's a lot of questions actually. So let's go through as many of them as we can. Some of the questions are very long, like reading a War and Peace novel. So for a poor moderator, please don't do that. And I apologize if you're not going to get to it, but I'll do my best. Sophie, let me pose this to you. I don't know to what extent this does relate it to CGAP, but you bring a overall global view. Omoro asks, in my case, we are working in refugees context. Most of the beneficiaries are illiterate and have no access to financial inclusion. How do you manage that in your case? Is that something that CGAP has worked on or has been in conversations with? Thank you.
Yes, we've been working on refugee finance in the past and again, as well as on finance in fragile context in general. I think there's a lot of things to say there. First, that it is incredibly important for refugees and for people living in fragile context to have access to finance, because it's a lifeline to resilience, but it's also a lifeline to resuming economic activities. Secondly, it's very important for a refugee to realize that the main issue really pertains to KYC, and their ability to resume being active financially by having the right documentation and having their existing documentation accepted in their host countries. But beyond that, there are a lot of opportunities and issues to solve for. In fragile contexts and for refugee, cash transfers from governments are fundamentally important. So payment, mobile wallet regulations, and the ability of refugees to access these services is fundamental. And of course, the cost of cross-border transfers can be very important for them because often they receive money from diaspora, from friends and family abroad. So very important. In conflict areas, mobile money can be particularly important, but having the regulation in place ahead of time obviously makes a whole of a difference. But mobile money regulation is very important because often mobility is constrained if you're in the middle of a conflict. We saw that in Sudan, for instance, where people could not pay and could not travel to buy the minimum necessities they needed. And mobile money could sometimes help them do transactions at a distance. So yes, lots of very important considerations to take into account, and lots of constraints also to work around.
No, thank you. That was great. And Claudine, let's take this question to you. Are women's savings and loan groups outside of formal financial sector? If they are, how do you minimize risks of potential bad actors? Thank you.
Well, thanks for this question. Savings groups started as completely informal groups. And then progressively, as we worked with them, we started supporting them to have formality that does not become an obstacle for them to advance. And this is how, for example, we're working in connecting them with microfinance institutions, also working with, as I said earlier, government institutions, central banks, etc., to help propose suitable offers and services and products to them. And as we also said, groups are built on trust and solidarity. Is at community level. And to minimize risk, savings groups establish very strong governance structures with clear bylaws. They elect their leaders and they have transparent record keeping. They also we audit them and we provide financial literacy to them as we progress. If you had seen savings groups at the beginning, 30, 25 years ago, you would see the difference that we are seeing now in terms of the capacity they have developed and how they are working. And we do it through partnership with NGOs and also by using digital record keeping tools to ensure transparency and also orthodox management practices. So these are some safeguarding approaches that we use to ensure that we enhance security and transparency and accountability for these groups. And in general, I would say that they have a really good record of positive audit and very limited cases of fraud based on what they have put in place. I will finish by saying, like, again, just to give you an image, savings groups started with boxes with 3 keys and each member, different members will hold one of the keys, which means accessing to the resources when it was physical one, it was very difficult. And now that we have moved to financial institutions, to mobile banking, makes it more secure. Thank you for your question.
That's very good. This is a question from Fatuma. I think I'm going to pose it to Mai. The role of central banks is critical to support commercial banks in adapting and easing the requirements for loan, especially for women, access to credit. Now, the question is, are there specific examples from Egypt that can be shared for inspiration? Hey, you're like our inspiration person. Let's see if you can inspire us. Go ahead. Fine.
Questioner wants from
Cite us.
I believe. Very good question, because really it's a struggle with banks to have them perceive, as Sophie mentioned, a case of a poor woman as profitable. This is a struggle. But again, we issuing a few regulations that could make it easier a bit for them to operate before starting to get loans. So, for example, the simplified KYC, the ability to open a bank account and create credit history for a while. This all helps. But then again, you don't need to study credit as traditional. I mean, I'm all for behavioral scoring, and we've issued a regulation to mandate behavioral scoring for our banks to allow them to really build on all sorts of behavioral activities to be able to study those women. Finally, I would say education, 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 because our banks are still from the mindset of corporate profitability. They want to see the dollars immediately, but when we educate them, and when we teach them how important this for the general public, and at the end it becomes an extremely profitable case. So this is how we're approaching it in Egypt, and it has seen a lot of successes, I would say.
That's great. I mean, education really cuts across everything. So, Sophie, a question I try to avoid, but I guess so many people ask it. So I think I want to pose it to you. And what will be the position of NGOs in the world after the suspension of USAID? How's that for a hot potato question? So go for it, Sophie. Bring all your media training into this answer.
Thank you. I think there's going to be a short and a long term, medium term answer to the question. In the short term, there's a lot of panic, and there's a lot of immediate fallout that are tremendous. But we're going to have to adjust, and we're going to have to see how other institutions can come in and support those that really play a key role in supporting immediate needs, especially on the humanitarian front. And so I think we're going to have to all play a role in compensating and coming to the rescue to support them. And in the field of women financial inclusion, or financial inclusion in general, this is certainly also valid.
Thank you. And also, it's not just the $40 billion or so that's taken off the table. We don't know how much of that will be recycled through other means, through State Department and others. Is all that intellectual capital that was developed in USAID and the fostering of support that they had done. So, yeah, it would be a big shoe to fill in terms of compensating. Claudine, let me try this question on you. You feel free to pass it on, but I think it's an important question. So savings and loan, obviously, we're talking about credit, we're talking about access to credit and all of that. There's a questioner says, can you share your insights and experience in the insurance sector's role in promoting women's financial inclusion? Do you ever interface with the question of insurance in your work? Thank you.
Thank you. Can you hear me? I'm getting for myself.
Yep. Yes.
Okay. No, thank you very much for the question. Access to insurance is a very interesting one, and it's in general, as insurance, as we can say, it provides protection to groups, but at the same time, it also has barrier because of norms that are there. women do not have access to land or capital that can help them. So we need the insurance needs to be tailored to them as with digital. But at the same time, the nature of savings groups itself constitutes the insurance they have through the social fund they put in place. When women save for their activities, to invest in their economic activities, they also save for what they call the social fund to help them in difficult situation. So it represents at the same time a form of informal social and financial insurance for members in emergencies around the world. And I could see it in countries like Mali, Niger, Nigeria, Syria, etc. And this is why CARE is supporting and promoting the use of savings group to promote financial inclusion. It's not only for the immediate gain for women or for immediate opportunities it creates, but how it reinforces them and helps them, it builds their resilience to face crisis in countries where we work. Well, this is what I can say. I know that in few countries there's partnership with insurance companies, but what it is not yet widely practiced. So what is important is to ensure that whatever service or product is proposed to savings groups, that it is tailored to women's capacity and their ability to have access to it and use it. Thank you.
No, that's great. So there's a lot of questions still that have not been asked. I'm going to ask, put Sophie on a very tight time frame, like literally 10, 20 seconds. Is CGAP doing any work on AI, Sophie? There's a couple of questions are around that.
Yes, absolutely. And answer the question. So AI is very important and can be transformational for financial inclusion. It can help process more value transaction. It can help improve like supervisors with subtech. It can help better tailor products and understand women needs, etc. But from a regulatory perspective, there is the other side of the coin is to ensure that AI is used in a fair manner and that it actually breaks the biases of existing practices and turn them into a more inclusive system. Often people ask the question in differently, right? They say, how can we avoid that AI creates more biases? But the current system is quite biased, as this conversation, has shown. So AI is also an opportunity. I think the terms that for me would matter most to keep in mind is explainability and accountability. Regulators need to make sure that models, AI-based models that are used, say for instance, credit scoring, etc., are explainable. We don't want black boxes, and we want accountability. We want the financial service entity to be able to explain, for instance, why an outcome might look discriminatory. And if they can't explain and they can't justify, they need to be outcome really oriented. Then there should be a pushback. So we want fairness, we want transparency, we want equity in the outcomes that these models will lead to.
That's great. These are excellent guiding principles. And it's 10 o'clock. I think we could have gone for a couple of days, but there's no way I could have kept the speakers here for a couple of days. So we did the best we could. The questions that are left on the table, we will use them as part of our ongoing training. And this webinar will be available for Toronto Centre courses, and we'll also put it online for others to use. Thank you so much to our speakers. You spoke very well. You talked about topics that were very complex in a very difficult time today. So thanks for your time to come in this context, and we look forward to collaborating with you as time goes on. Take care and God bless us. Take care. Bye.
Thank you so much.
Thank you very much. It was an honor.